Nobody seems to be noticing what is currently happening to crude oil, as those indicators right here are currently signaling a recession warning. And so to understand the latest price action here at crude oil in today's video, we discuss the most important technicals, fundamentals and also macroeconomics of this commodity. We have recently seen that big reversal from this support level at around $55 per barrel. We've seen that bullish trend actually build up. We've seen that volume delta has been quite neutral. We have seen it spike to the upside and downside in a similar pattern. We've also seen a bearish breakout to the downside here at the RSI, which obviously would suggest we might see a downturn to the downside. We might see a bigger corrective movement here through this blue trend line, but whether this is actually about to occur in the next few days and weeks, if we actually see a bearish breakout, or whether the bullish chances for a continuation here of this bullish trend are actually higher, we have to take a look at the most important macroeconomics, because those are obviously showing you how those trends behave, how those cycles behave, and we do in fact see that history is repeating itself. We have marked some massive milestones here on the weekly chart of crude oil and compared it with some of the most important indicators such as the DXY, the gold to oil ratio, the copper to gold ratio, and also the gold to S&P 500 ratio. And you can beautifully see that previous to the great financial crisis, for example, we've seen that bullish rally here at crude oil as credit has been abundant. We've seen that actually coincide to the DXY dropping. We've seen a weak monetary policy. We've seen the dollar drop. We've seen that coincide to oil actually also obviously outperforming gold prices. But then suddenly we've seen that reverse. We've seen that gold started to outperform oil with this massive spike here to the upside. We've, by the way, also seen that the dollar has been rising. We've seen that coincide to the copper to gold ratio fall off a cliff, because previously we've just seen that gold has been able to outperform copper, but not in the manner it has been after the crash hit. And so our first lesson from history at this point is that whenever you do see a divergence here at crude oil with a upwards trend and the copper to gold ratio here with a downwards trend, whenever you do see that divergence, that is a really bearish signal. And in fact, if you have a look at what is currently happening, we do have that divergence. Not in the same manner we've seen it previous to the great financial crisis, but we are currently seeing a weakening trend here at the copper to gold ratio, and we are seeing more or less consolidation, or maybe even if you take this last few weeks here, we are currently seeing that more bullish sentiment is actually regaining strength here at crude oil. And now let's have a look at the gold to S&P ratio. Obviously quite similar in this time as well. Whenever you do see that gold is outperforming the S&P, which usually happens before crashes actually occur, then you tend to see that actually being a really important and good warning signal. And in fact, we're also seeing that happen right now. In fact, if you measure the S&P 500 not in dollars, but in gold, it actually topped out here in 2021, the last time. And it's really important to understand that the dollar is no constant value, it's a flexible value. And as you see here with the DXY, it weakened a lot by this time, since 2022 in fact. And that is really important to keep in mind, and we do in fact understand those cycles. Therefore, we do see that a lot of those reversals that led to a crash here at crude oil actually coincided to be at this blue trend line here, which we are currently hitting again. And so historically, that has been a level here that has shown to be always actually occurring before recessions. We've seen a lot of reversals from this trend line. We've seen that whenever those massive crashes began, we've seen a reversal here at the gold to oil ratio, and also a massive weakening at the copper to gold ratio, also coinciding to gold actually strengthening against the S&P 500 for quite a while already. And you have seen that also happen here in 2014, where we've seen crude oil actually fall off a cliff. We've seen that coincide to massive strengthening at the DXY. We've seen that gold outperformed oil. We've seen that divergence as copper actually weakened against gold for quite a time, even before the crash actually happened. And so we like to use the copper to gold ratio really as a warning signal. And you can see also that we've seen the gold price outperform the S&P for quite a while. Now, it's looking quite similar concerning the 2020 crash, and now let's have a look at what is actually currently happening. You do see that we're hitting this historical trend line here at the DXY. You're currently seeing that long stretching upwards trend here at the gold to oil ratio, as we've seen that massive bear market here since 2022. And we are at the same time seeing that the gold to S&P ratio has been rising also for quite a while. And essentially combining those ratios and combining this knowledge that we have from history, it really seems quite obvious in our eyes, Chronos, that we might sooner or later see a bigger crash happening to crude oil again. Because you have to understand that even though crude oil is a scarce asset, it is measured in something that can be manipulated, which is the dollar. And when the dollar supply, or when global liquidity is manipulated, in other words, when it is contracted, and we just do have less liquidity in the system, there is no buyer for crude oil, and we seem to fall off a cliff once again. And also as the equities market is crashing, as we generally see liquidity going down, we do also have less economic demand for this energy commodity. And so we do believe history is about to repeat itself. We do see the first signs with the gold to S&P ratio rising, with the copper to gold ratio having this decline for quite a while now, with gold also outperforming oil, obviously, and also that the DXY is currently starting to consolidate and may reverse from this trend line once again. This is our primary objective, that's our primary thesis here at Chronos. If you like this approach, we would really appreciate you subscribing to our channel and like the video so you don't miss future videos, and also support us for work here on YouTube. Also check out our Discord server, which is also linked down below. And if you have any further questions or want to comment on your opinion, don't hesitate to do that in the comments down below. Thanks for your support. See you the next time. Bye bye.